There's one simple reason why you're not being profitable as a trader. All right. Now, we can talk about emotions and psychology and all this other stuff, but at the end of the day, there's one thing that's like something physical that you can change in your trading today that is actually going to make a huge difference in your trading. I know this for a fact because once I learned this, it completely changed my trading around. So, what actually is it? Okay. Now, before we dive into that, right, the first thing that's going to be really important to you is having a strategy in itself, okay? Now, every strategy should have one thing, right? It's going to be a stop loss, okay? No matter what strategy it is, no matter how you trade, every trader should always have a stop loss in place, whether it's a hard stop or whether it's a mental stop. Now, having a stop loss itself is not necessarily the one thing that's going to make you profitable, okay? What is making sure that you're putting your stop losses in the right place. And that's what I want to talk to you guys about today in this video. Because if you are someone, I want you to curious, if you're watching this, I want you to raise your hand and really like seriously raise your hand and tell me if this is something that's happened to you. All right, imagine you get in, maybe it's NQ, maybe whatever it is. You're looking at this, you're looking to get in long. So you get in long around this area, comes down, hits your stop loss to the tick, and then ends up going all the way up. Okay. I want you to comment down below, stop. Comment down below the word stop if that's happened to you. Okay. Because I know it's happened to me a million times. And I realized, how is it possible that I keep getting stopped out at the exact lows? It makes absolutely no sense. Okay. And the first 2 years I was trading, it happened so many times, and I could not figure it out. And I finally realized the reason why that's happening. It's because you're simply just putting your stops in the wrong place. You're not using something that I learned from my mentor, which I like to call logical stops. Okay. Now, logical stops are making sure that you're putting your stop losses in a place where if you do get stopped out, it makes sense. It's logical. So if I were to get stopped out here, it wouldn't be logical because price went in the other direction, right? Now, let's say I was getting in long all the way up in this area, and my stop loss was right here, okay? Just like this. My stop gets triggered right here. This would be a quote-unquote logical stop. Not because I got stopped out or it didn't work, but because after I get stopped out, price continue going in that direction, right? And that's how you should be trading. If you're getting stopped out at the lows or at the highs, if you're shorting, you're simply reading price action the wrong way, or you're putting your stop loss in the wrong spot. And in this video, I want to show you guys where to put the right stop losses so that doesn't happen to you, okay? Because you can look at a chart and you can see a million ways that the market likes to stop people out. That's what the markets are designed to do, right? That's how the banks, the institutions, they get their liquidity from you guys, right? From me, from the retail traders. And you can see, you can just simply by looking at a chart and say, hey, if you were in short, you probably had your stop loss right above this high, right? If you were in long, you might have had your stop loss right below this low. You can see the amount of people who probably were in short, got stopped out right at the highs, and were like, oh my God, it's coming back down the other way, right? Then they maybe got stopped out on the lows, and like, oh my God, ended up going in the right direction the other way, right? It's a very common thing that happens to a lot of people. So I want to break down kind of how to find these logical stops, what they actually mean, how you can use them in your trading and actually apply them to start, losing less money and making more money. So let's go ahead and get into it. Now, the first thing, like I said, is all going to come down to a strategy. Now, no matter what strategy you have, you should be using logical stops. Now, I can't go 30 minutes in detail in this video showing you my exact strategy. So what I did is I made a free training about it, and I put in the link in the description down below. All right, first link in the description. It's going to say free training. I want you to check that out after this video. You'll get a much better sense of kind of how I trade and a few other tips for why you're not successful as a trader. But for this simple part, right, the first thing is you have a strategy. Now you need to figure out where to apply your logical stops in that strategy, right? How does that come into play? So let's take a look at NQ, for example, right? The biggest and most important part that you need to realize with trading and how stops and markets move is that they're always going towards new highs and new lows, okay? That's how markets move, right? There's always going to be highs and lows, right? You can point them out on all time frames, right? We have a high, where is it? We have a high right here. We have a low right here, right? Another high all the way up here, another low all the way down here, right? Whatever it is. Price is always going back up to these highs and back down to these lows and taking them out, Okay, when I mean taking them out, I mean they're coming in and they're taking liquidity. They're taking price below the low or above the high, right? And so if you can understand this, then putting your stops right below a low or right above a high may not make the most sense in some cases. Okay, for example, we're taking a look at NQ right now on the 1 minute chart. Okay, again, this works across all time frames, but for now we're gonna stick to it on a smaller time frame. Right, NQ, we have these equal lows right here, nice little support zone, right? We have a demand zone, right? However you want to trade, however you want to even look at the markets, you can see that there's a support level here. We have a low. And so price ends up taking out that low and then immediately reverses higher. Now, the key takeaway from this is that you simply want to wait for price to do the stop hunt, for take out that low first, and then make the move. And then you look for your entry in this move, okay? So let me kind of break this down for you here. Let's say like this NQ, or this was news. Let me look at a different one. Example, right here. We have a nice little low right here, okay? Nice little support level, right? Remember, price always wants to go towards lows and highs. So you want to wait for price to take out a new low before then going to a new high. You can kind of look at it as a formation that looks like this, right? Kind of looks like this, right? Where price is constantly taking out a new high, taking out a new low, new high, then new low, right? It's a different way of looking at a support resistance. You can call it a wedge, broadening formation, right? There's a million ways you can call it or look at it. But you want to look at it like this, right? Price takes out a new low. Now we start to say, okay, now that we've taken a new low, let's look for my setup for a long entry, okay? And the key thing you want to realize with this as well is that after price takes out a new low, it's not like you immediately just want to buy, right? You want to wait for your setup. Because in this type of formation, when trades look like this and the chart looks like this, you don't need to catch the entire move, okay? You don't need to catch, right, all the way from this low, all the way down to this high, right? You don't need to catch that. What you want to do is wait for price to take out that low, start to move back up. Now you have a sense that since we've already taken out this low, this having my stop loss under this is logical. Putting it right below that low is more logical, as opposed to something like this, right? Where maybe we do something like this, right? Putting my stop loss below this low, right? You want to wait for price to go ahead and take out that new low and then come back up, right? Because now we know that the stop hunt has been made, right? That everyone who's short, right, they got in short, and everyone who's long already got stopped out. So now the move up can finally be made. And when you understand this, now it makes sense to put our stop loss under this low as opposed to under this low. Okay, let me know if you're following me here, right? So, for example, in NQ, after we go ahead and take out this low, you wait for your setup, right? Again, there's a million setups you can do. I have a free training on mine below, whether it's supply demand, moving averages, VWAPs, whatever it is, right? You wait for your setup, and then you just catch a piece of the move, right? Now that we have now that we have the stop loss in place, we know that putting my stop below this low makes sense, okay? Then we can simply say, now, I mean, this is a different example, but taking a look at NQ, we have this entire section to take profit on, right? You could just simply enter all the way up here, right? Put your stop below that low and scalp it. You could wait for just a nice move all the way to here, put your stop under that low, and look for a much bigger move, right? You could even wait for this pullback here, buy this, maybe for a scalp, for a swing, get in long there, stop under that low, target the highs, right? Where would you target on NQ? Probably this high. We already took it out, so you'd rather, zoom out, look for a new high, maybe all the way up here, something like that, right? Just as an example. But simply looking at how a price actually moves and that understanding that it always goes from new lows to new highs, back to new lows, back to new highs. By putting your stop loss in a logical place, one that makes sense, one where when you do get stopped out, it's not going to be at the lows, you can finally, be a lot less frustrated with your trading, and also not get stopped out as much. And doing that is going to make you a lot more money in your trading. So wanted to come on here. I know it's a little bit of a quick video, but share my thoughts with you, show you guys kind of a little bit more on logical stops and entries. It's something that my mentor completely changed the game for me, and I wanted to come on here and show you guys a little bit of the knowledge that he gave to me as well. So if you guys want me to be your mentor and you want me to learn more about my strategies and you can learn how I trade, I've been doing it full time for the last 2 years. I've been trading a total of 6 years now, very successfully. We've mentored over 100 students. We have a 91% success rate. If that's something that interests you, I want you to click the first link, or maybe it's the second or third link in the description. You can go ahead and book a call with someone from my team. We'll go ahead and see if you're a good fit for learning from me and my strategies and my coaching. But with that being said, hope you guys enjoyed. I want you to turn the notifications on as well. Subscribe if you haven't. I'll see you guys in the next video.